Hi guys, I hope that you guys are doing okay. Today we are looking at cost accounting, and to begin we're going to start at the Free State paper, for the year 2023. So we're going to quickly go to question number 3. That is where we find our cost accounting question. So I'm not going to do the entire thing. I'm just going to be focusing on certain adjustments. All right, so let's begin. Our question here demanded that we prepare or calculate the value of raw materials issued to the factory. That is number 1. We also do a calculation for depreciation, and then we prepare the factory overhead cost note. All right, so we're going to quickly do that, and then we see how far we can go. All right, to begin with, we were given raw material stock. So I'm going to come here. That is my opening stock. So I'm going to come here and say my opening stock. All right, so that is my 513,500. That is my opening stock. So I'm going to come here, add my opening stock. Then we come here, it says raw materials to the value were purchased. So I'm going to come again and say plus purchases. That is my 2,100,000. I add my purchases. Then I am told 7.5% of the purchases were returned. That means I must come here and subtract some returns. So I need to get 7.5% of the 2.1 million. So 2.1 million multiplied by 7.5%. And then that is going to give me 157,500. So I come here, then I subtract 157,500. And then I'll go on to the next part, which says carriage on the purchases amounted to 94.5. So I'm going to come here and I'm going to add my carriage. Remember, carriage is added. So I add my carriage, which is 94,500. I've added my carriage over there. Let's go to the next one. It says additional 240,000 worth of raw materials were purchased from Destiny traders in the US. A 5% trade discount was received from Destiny. So it simply means I'm taking the 240,000, then I'm going to get my 95% of that. If I get 95% of the 240,000, I'll remain with 228,000. So I'm going to come here, then I'm going to say plus the new materials that were purchased, which is 228,000. But we are told that we will pay import duty, which is charged at 2% of the final invoice amount. The final invoice amount is the 228. So I then get 2% of that. And if I get 2% of that, that's going to give me 4,000 plus 4,560. All right. So these were the adjustments that related to our direct raw materials. So once you do that, you get the final amount. Let's go to 3.2. Oh, I had to subtract. Here you have to subtract your closing stock. You have to subtract your closing stock. Then you say minus closing stock. Okay, I had left that one out. That is your 672. Okay, so I have to come and say minus 672 and 20. And then you get the final amount, therefore, which becomes your 2,111,040. That becomes the final amount. If you are doing the production cost statement, you will need that amount in the preparation of the production cost statement. The next one says calculate the depreciation on the factory equipment. It is very important that when you go for this paper too, please prepare accordingly for your depreciation calculations. Okay, so in this question they gave us information which said depreciation on the factory equipment is calculated 20% on the diminishing balance method. So that means we're going to need carrying values here. Old equipment was originally purchased for 124, was sold at book value on the 31st of July. On 1 March 2022, it had accumulated. 1 March is the beginning. It had accumulated depreciation of that. No entries have been made in this regard. Okay, so remember your son, that is your sold, your old, as well as your new. So this sold, it had a cost price of 124,000 and it had accumulated depreciation at the beginning of 34,720. That means it had a carrying value of 89,000. It had a carrying value of 89,000 280. So we then take that carrying value of 89,280. Then we multiply it by the rate of depreciation, which we're told is 20%. And we had this asset from March and it was sold on the 31st of July. So if you count from March, April, May, June, July, that is 5 months, multiplied by 5 over 12. That is going to give you depreciation of 7,440. That is the first depreciation for the sold. Then we come to the old. We were given depreciation on the old remaining is 84,000. So depreciation on the old we were given to be 84,000. Not a problem there. Depreciation on the new, we are told that new equipment is purchased for 215,000. So we come here, it is purchased for 215,000. And since it is new, it will not have accumulated depreciation. So you simply multiply this by 20 over 100, and then you would want to know for how many months were you having it. A new equipment was purchased on 1 September. So you're counting from September, October, November, December, January, February. That is 6 over 12 months. And then that is going to give you 21,500. If you add these three amounts, you should get your total depreciation, which is 112,940. Please watch out for these calculations. Make sure you prepare for your depreciation. Even the 1 rand residual value, make sure you prepare for your depreciation as you're going for your paper 2. Prepare the factory overhead cost note for the year ended 28 February. So we're just going to do the factory overhead cost note here before we conclude today's class. Okay, so one of the things that you must do is to open brackets. So you simply come here, you begin with your rent, and then you open your brackets. You have your 227,500 as if you are doing a statement of comprehensive income. Then you do your indirect materials. You also open bracket. That's 170,800. The next one is indirect labor. Your indirect labor, you open bracket as well. That is your 74,742. The next one is your sundry expenses. You open bracket again. That is your 83,100. And then you come to insurance. You see it is saying administration. Okay, but let's open for insurance. And then we're still going to bring it. That is your 28,560. And then the next one that is there is your water and electricity. And then we're not given the amount. Okay, so we want to do adjustments now that relate to these. So we begin with bullet number 1. But the first thing you have to do is to open your brackets. It then says 85% of all indirect materials are used in the production. So remember that in this final column here, we want what was used. We record what was used. So we are being told here that 85% of all indirect materials was used. So we're going to come here, then we say indirect materials multiply by 85%. So that is what we're going to bring in this last column here. If you punch that on your calculator, you should get 145,180. 145,180. Okay, let's go on to the next one. The next one then reads, the rent for March 2023 was paid in advance. Okay, so rent is paid in advance. We should subtract whatever amount that was paid in advance. Then we are told again, after the rent was paid in advance, that rent is a fixed monthly amount and remain unchanged during the year. So what they're trying to tell us is, when we come here to the 227,500, if we divide this by 13, we should get rent per month. In this case, it's 17,500. So if rent was paid for 13 months, we should come here and subtract the rent for the 1 month, 17.5, so that we can remain with the rent for 12 months. All right, so now we have rent for 12 months because we have subtracted the 17.5 for the 13th month. Then they say rent is allocated according to the floor space. Okay, so now we need to allocate it. So after we do this, you will find that you'll be now left with the rent, which is 210,000. So here you are left with 210,000. Then you take that 210,000, then you now say 900 plus 150 plus 150. That will give you 1,200. Okay, then you now say multiply this by 900 over 1,200, and then you close your bracket. You should get 157,500, 157,500. That is on your rent. Let's quickly go on to the next one. It says 80% of the total sundry expense account is allocated to the production process. The telephone account for February 2023 has been received and has not yet been paid, 6,300. So that is in my sundry expenses. So I'm going to come here in my sundry expenses, then I'm going to say, since I have an expense which is telephone which has not been paid, I'm going to come in, I'm adding it, plus 6,300. Okay, do I have anything else? 80% of the total sundry expense is allocated to the production process. So in other questions, they'll tell you maybe the 10% goes to the selling and distribution and the other 10% goes to your administration. So you must watch out for that if the examiner wants you to do those parts. So we're going to come here, then we're going to now say, if we add these amounts, then we're going to get in total, I'm just doing it so then you know what I'm doing, 83.1 plus 6.3, you're going to end up with 89,400. 89.4, then you split it now. We are told 80% is what was used. So you get now your 80%. And then in total here, you should get your 71,520. Okay, 71,520. Then the next one says, the bookkeeper divided the total insurance amount. Okay, so this is an error now. You will see that others were omissions, but here we are dealing with an error, whereby the bookkeeper divided the total insurance amount equally amongst the factory administration and sales distribution. Okay, so that is the insurance. So this is a third of the amount because it was divided equally amongst factory administration and the sales. So if I multiply this by 3, I should get the amount before it was divided. That gives me 85,680. 85,680. Now I can allocate it properly now. It should have been allocated in the ratio 3:1:1. You know that you add these ones, right, to get 5. 3 plus 1 plus 1, you get 5. And then the factory is getting the 3. Then you come here, then you multiply by 3/5. And then this should give you 51,408. This is what you take over there. All right, so I'm gonna stop the video right here because my time is exceeded, and then in the next part I'm gonna be explaining the other aspects that relate to this question.